Hello, this is John Piper with the weekend video clip, and it's Saturday the 3rd of January and it's just past midnight in the UK, early evening on Friday in Panama. There's an old Wall Street saw about Wall Street, and we get rid of this tiger. Okay, the old Wall Street saw is the effect that if you don't get Christmas rally on Wall Street, then watch out the coming year. This is Christmas Eve. We saw the market close. It actually did close up, but it was okay. We did see a brief rally, but the close not very impressive. New Year's Eve was even worse. We saw a bit of a blip up, and then we crashed right down again. So well down on New Year's Eve. Similar action today, 2nd of January. Sorry, yesterday I should say. Opened up, but sellers predominated all the way through. So I think the writing's on the wall. We're going to see bear markets in 2015, and we need to see when we ought to go short. Maybe we should have gone short already. I certainly have a case for that. But let's have a look at the wave patterns, see what we can decipher from those. Well, looking at the weekly chart, obviously 18,000 is a key level. It's been tested a few times now. The fall off 18,000 actually isn't that. Nothing much has happened at this point in time. This is a fall, 200 points or so, but there's no clear pattern there. If we see a buying response, again, the fact that we've seen this negative action over the Christmas period is definitely bad news. But we do need a bit more than that, really. Not even on the Dow. Look at FTSE. It's actually similarly dreary. Again, we had this sideways drift on Christmas Eve. We had this similar action actually on New Year's Eve, but predominantly a downtrend over the period, but no real pattern. I mean, there's a possible 5 ways, but it really isn't anything to write home about, especially with this blitz up here, which took out the low here. So it's really a question of waiting for what comes next. Let's have a look at the DAX. DAX looks a bit more negative with a clearly impulsive decline, not really can't count 5 waves. Then a corrective rally with this sort of blip up to there, so we could be looking at selling the market maybe below there with stops above here. Quite a wide stop. We really want to be shorter term stuff. I think probably the way to look at this is as a trading market rather than adopting longer term positions right now. We could see a New Year's rally. Okay, we haven't seen much today, but the real action will probably start next week. I mean, nobody's going to be too bothered about one day's action. What I mean is that the bigger trader will be back next week, not today. So we'll probably see more determined and determining action coming in next week. In the meantime, I'll be concentrating this year on the robots again. The robots have been very interesting, very useful and very profitable last year. Started about 3 months last year, and they had a good day today. For some reason, mine misfunctioned, but that's all part of the joys of robotic trading. But that's certainly be a major factor in my trading going forward this year. Very happy to discuss this. Any of you who would like to know more about that. Anyway, to summarise on equities, I'm expecting markets to fall back this year in a major way, and it's just a matter of choosing the time to go short, really. So look at the Nikkei quickly. Nikkei still looks pretty positive. We've got sort of ABC here, good rally up, blip down over the Christmas period. Could you see it rally? I think there is certainly a chance we're going to see a bit of positive in January. Whether it'll last is perhaps the key question right at this point in time. Well, gold, excuse this tick here as a false tick, so we're getting rid of it. This still looks corrective, A, B, C. There is some hope, it's a bit of a spike there, so there is some possibility that we're going to see a rally. I mean, there are 2 ways of counting this, but it's difficult. The first count was that this is a 1, then we got a 2, I think A, B, C down to there. This was some kind of beginning of another 1. This is a possible count, but we do need to see some pretty dramatic action. I mean, okay, this spike could be the start of something, I guess. Had to wait and see how that develops. But currently, I have stops above 12.06, I think, by extreme stops, and above 12.40 there to buy into the market if we do see a rally coming in. Whether you want to do the same for your own trading is, of course, a personal decision on trading. I mean, trading is all about making your own decisions on the risk and reward and determining the money management levels, which is so critical to success. You have to plan for success if you want to make a lot of money in the markets, and you've got to risk a fair bit. You can't make a fortune from small amounts, and you can't expect to do that. I mean, if you want to make, say 10,000 a month, then you've got to plan for that in position sizing to be able to do it. Right, on the next market. Right, well, the pound's had a very bad day against the dollar. Count now, that's the same 1, 2, then this is a 1, 2, rather subdued 3. I mean, maybe we're going to seeing a 1, 2, and this is a third coming in now. In fact, I'm still negative here, as I mentioned a few times. I've been selling the pound around here, I think, so fairly good entry point. We got stopped out of our short positions on the spread betting. Don't want to sell this spike particularly to see how that develops. Pound euro, not so much happening here, although again the pound had a very bad day here. I also sold some pounds against the euro. Can't remember quite where now, but it's probably around here somewhere. Same time, same day, in fact. Obviously, the pound remains stable here. I mean, I keep seeing this bad day today, but this chart is not too interesting. Really. Let's look at euro dollar. Unsurprisingly, based on the previous two charts, we are seeing this trend line break now substantially. So it looks like that could well continue. I mean, it could be a false break, but it's had a fair bit of time to digest that break, and we're seeing the thing move further away. So it looks like the euro. I mean, the dollar's almost bound to increase. We can see higher interest rates on the dollar this year, almost certainly. The euro. I mean, it's interesting that the QE has certainly done wonders, I guess, for the US economy and the UK economy. Europe missed out because of the fears, actually, based on the wheelbarrow experience back in the 30s in Germany, which of course heralded in World War II and Nazism. So not surprising they're rather wary of doing the same thing again. But and thought the euro is now going down, which will probably help Europe, but it's going to take some time. Anyway, I think that covers the ground. We'll be looking obviously for trading opportunities going forwards, and I expect to see some in January. I will throw out, as usual, as many short-term opportunities as I can, which will be up to you to trade in your own way, and make formal recommendations when I see something that I think is particularly good. Have a great new year. Obviously, all the best from me. Do all I can to make it a particularly successful new year. And thanks for listening, and bye for now.